Welcome to Beyond Profile. Today's Tuesday, February 7th, 2012. We have a market that just does not want to stop going up, and Friday's job number, obviously we got the big gap open. Yesterday was a range-bound day within the prior value area from Friday for both markets. We're looking at the NASDAQ market here. You can see what a tremendous move this has had since we've broken out of this little base here in December. Was a balanced trading area, gapped up in January, and we basically ran the whole time here until we got to February, and February continues. We've only had a few small pauses, if you will, or acceptance of values, maybe of 3 to 4 days in size here, where we had some short-term acceptance. Of course, this market now is way up over the prior pivot highs and a multi-year highs, 24, 27, 24, 25. This area right here, if you looked at a longer time frame chart, you would see that there was multi-highs over here that we had come up to before, and we'd rolled back down from them. Now we have what we call a change of polarity here, where this is now back tested this level, and obviously is making new highs. So very bullish still. There's no volume in the market to whatever extent here people are looking for. Everybody's looking for a pullback, but the market just seems to want to keep right on grinding higher here. At some point, obviously, we'll get some corrective measures, because when you look at the 4 stages of market activity, we're basically may have a new stage 3 developing up here. But overall, I mean, the whole month of January was basically one big vertical move up. We don't really have stopping price and developmental around us. How big does this area become over time? If we keep right on going here, will the 24, 27 area back down here, do we create a larger balance area over in time, like we did back, a few months ago? So that's the NASDAQ. Let's take a look at the ES. There you go. Here's the S&P chart. Same similar situation. Note the point of control for January, 1308. All right, that's a big level. That means that all of the volume that was transacted for the month of January, where the majority of contracts had gone off at a certain price, was 1308. That's a big level there for the S&P, and you can see we actually chopped around in somewhat of a balanced area there. We tried to go higher, we tried to go lower, and then we obviously gapped open on Friday again. But we were starting to create some short-term balance here between these levels, where the market was trying to accept some value way up at these levels. And of course, we got the breakout again on Friday. And yesterday's bar, if you thought Friday was narrow range, yesterday was even more narrow than the prior day. And some very challenging trading conditions, because the market is barely even moving. You get a 3-tick, 4-tick move. It'll sit there and go sideways for almost a half an hour before it may pop another 2 or 3 ticks in one direction. So very challenging times with these low volume here, and you really have to to get your edge at the unfair highs or unfair lows, and just let it play out. And we're kind of spoiled there from August up until almost really January, where we could be in a trade and 5 minutes later you're up 4 or 5 points on something because of the volatility in the market. Things have changed, so you need to be able to change with the market conditions, obviously, and change maybe a little bit the way that your execution may take place for the market conditions. So, and again, this too shall pass. These conditions will change. It always does. It seems like the market always has a way of cleaning up itself, if you will. And we'll get some pullbacks, and markets will begin to hopefully facilitate trade here a little bit more back to normal. Of course, the VIX will play into that, the volatility index, which is hanging right around 18. So the next few weeks here, this week's going to be pretty light because we don't have much economic data, but the next few weeks, some things building up overseas that could again ignite some sort of a volatile move in the market. So, but until then, the grind continues higher, and we're going to continue to look to buy pullbacks in the market to see if we can't get something which would resemble a pullback. The only thing we have really on the S&P from last year's highs were this 1350 number, which we could cycle from, I'm thinking 25s to 50s here. I don't know if we go fill the gap first and then we go get that area. I mean, if you looked at yesterday's trading action, we did hold the lows from Friday. And it looks like this morning we're opening up, we're down at 1335 area, which means we're still inside of the value area from yesterday. So we're right on the edge of the value area low. So if we stay inside a value, we can in fact auction back and forth again for another day like what we saw yesterday in this market. So maybe one morning we'll open up with a gap down or something that'll ignite the move, but it's not going to be today. All right, it's not going to be today, and like I said, there's nothing hardly on the calendar either, so it's going to be just pure technical based trading within this range. All right, folks, have a good trading day, and wait for your setup, wait for the edge, and we'll see you in the trading room. Have a great day.